Hi guys. I hope Leshapu, and yeah, today I want us to look at Nasdaq, which is something that I feel like we haven't looked at in a while because some people they suggested that I add, the instruments from Deriv. So if you're new here, make sure that you like the video and you subscribe because this is where I share, market analysis videos. And if you like and subscribe in that way, the videos will reach more people. So this is what we had the last time when we analyzed this one, but we'll get to it in a short. So for now, let's just start at the top and make sure that you stick around so that I show you how to do the proper top-down analysis on Nasdaq, which is something that we did the other day. We're just doing a follow-up and see if we can get trade ideas for next week. So as always, we always start at the top, which is our monthly chart. And on the monthly, we don't have much happening. We just have, I think we should put a horizontal line now so that next time we're doing analysis on this, we know exactly where our zone is. So this is where our monthly area of support starts. Is this, and that one at the top, that's where your resistance starts. So that's your monthly, and we can see that the price sort of went until they didn't reach the resistance, but it's dropping now. But remember, it's still in between. We're still here. It can still go there, it can still come here, so we can go in either direction depending on what structure you're going to find when you're drilling down to your smaller time frames. That's it. We don't have anything to comment on here. So on this one, our wish is coming to life, guys. Remember last week we were talking about this zone. I said when you're going down, was it last week or Sunday? We were going down like this, and I said at the point when you're going down, if you haven't watched that video, make sure you watch it. I think I posted it on Sunday. So I said when you're going down, this was our trend line, and we hit this. Remember, this is your what? Remember, this is where your monthly support starts. So we hit the monthly support, and then from there, the selling trades that you're taking, you must make sure that you stop taking the sell trades because of what? You have hit the higher time frame support. You don't want to sell into that. So after the price hit that support, it turned and went up until there. And when it did that, what did it do to the structure? It changed the structure because of what? It broke the area of resistance that was here, and it also broke the bearish trend line. So you can see that this time frame is sort of bearish. So this time frame being bearish, the nearest area of support we have is this. We don't want to chase the price. Just because you know that the price is bearish and it's been moving like this does not mean you can just go and execute here. Because what you need to keep in mind is that when the price is moving, it doesn't always move like this. So this is a healthy price action. It's a healthy price action than this one, because this is very dangerous. It can just come back like that. So when the price is moving like this, you are happy that it's not even stopping. It's moving up in your direction, but you need to be careful. Make sure that even your stop losses, you are very strict with how you manage them, because if it's not pulling back and start a new wave, then it can be very dangerous. So here what you just need to understand is that once the price gets to this, which is our weekly support, we are going to execute. So these are the rules that I've been showing you on this channel, and even the guys in the mentorship, the new group, we are starting in 2 days time, 3 days time. It's on a Monday. We're going to start with the lessons where I'll be showing them how to do this in more details from the basics. We're not just going to start with the market analysis like I'm doing now. So if you're interested, you will just let me know. So from here, what you can take from it is that we are approaching what we're still far, but if you hit this, remember even the comment that I made in the previous video, I said should the price come back here, we're not saying it's going to come back there immediately, but should it come back here, you have got every right to expect it to bounce from there. Because if it was to come back and do this, it means now you will have what? A lower low. When you have a lower low, that's when your trend line that was here, you will now remove it and put it there, because this point gave you a lower low. So that's all that you can take from this one. You still have a gap before you can get here, but should it get there, you should be ready to attack. Let's see. I think from daily, that's where the structure got more interesting, because this is where we were saying that the price was moving up. You see, on monthly it was just a smooth move like that, but when you're coming down to daily, you can see this is a healthy move. This, that's what you want. So but it's just that now the price came back and reversed. So let's see on weekly, where was our area of resistance? So it was still far where we turned, but was not anywhere near it. So let's check on daily. Even on daily we didn't have anything, because this one, I think it was broken, if I still remember. Let's just bring a cross her. Yes, this was broken. So the next one, we still have space, which is around where we have that horizontal line. Remember, the horizontal line is what? The beginning of your monthly resistance. So let's see, on daily, this is what we have. When the daily price was moving up, it gave you higher highs along the way. So you could maybe draw your trend line like this and say that move to the upside, it is represented by this trend line. So that being your thing, your trend line, it means at some point this was your nearest area of what? Of support. But when you assess it, you can see you never took off from the zone. So it was not a good zone, and even the price action is not so nice. So that was not a good zone. So what did the price do? The price pushed past that point, meaning it broke the support. That's where, even though the trend line is still holding, but the fact that the bulls or the buyers are not defending their zone. Pella, remember, a support, it's a territory for buyers. That's where you find buy orders. So if those buy orders or the buyers, they are not defending that zone and cause the price to be rejected, then who are you to try and push the price up? Because you can see when the price came back, yes, it did try to reject, and it formed what? A bullish pin bar. But remember, a bullish pin bar, if you don't break the range, it's pointless if you're gonna come and break to the other side. This one I tell you in each and every video that I make. And from there we shifted to this being our next area of support, this one. And what did the price do? When it got there, it tried to get rejected and react from that, and it went up there, but it was not enough because it didn't even reach the point where we came from. So from there, the sellers, they pushed past that point and they broke two support zones and they broke a bullish trend line. That's when you're like, this time frame, the structure has changed completely. It's now moving to the downside. But remember, every time your zone is broken, you still need to move back and find the next one. The same way when you started with this being your nearest, it got broken, you shifted to the next one, it got broken, shifted to the next one, or even if you kept it here, that's where we kept ours, and the price went back to it. When the price went back to it, we said if you are executing on daily, if daily is your execution time frame, you couldn't take this trade. But if daily you are looking at it as your higher time frame, that will give you direction so that you can execute on smaller time frames, then yes, you could execute based on confirmation or how the price is reacting within this zone, because you will say that now the price has hit my higher time frame level, which is a support. But because this time frame, which is a daily, is no longer bullish and I'm trying to buy to the upside, I need to be careful. I can't just go in. I have to wait for confirmation. So if you got your confirmation on those smaller time frames, you would execute, but at the same time, you don't have to expect it to go all the way up and give you a new high and stuff like that. Yes, it's possible, but don't predict that. Because why? This is not bullish. So you'll just take your buy and target what? You target the next opposing level or trend line. Like for instance, if you're using this daily as your what? As your the direction or the main trend or the bigger picture, then it means maybe let's say you're trying to execute on H4. On H4, when you're executing based on that confirmation, whatever confirmation you're getting there, you are targeting the next opposite structure. So in this case, you can see we do have this here. We do have that. So that would be your, let's see if it did touch it from here. Yes, you can see that's where we touched it. So that's why I'm saying when you are doing what? When you're buying, because the time frame that you're using as your higher time frame or as your higher picture, the bigger picture, it's not bullish. So you can't just expect the trade to be long term. So you're gonna exit at the next level and wait for the price to sort of show you if it wants to create a new high. When that happens, then you can search for new trades. So in this case, it hit that level and then it started dropping. So now it's time for us to update the stuff that we have here. Let's go back to daily and go through this like step by step. So we can see that even here you can see it turned at that small candlestick there. So if we have to update here, we can say this support that we had has been broken, which means we have to shift down and look for the next opposite level of support. So you can use this one here as your next area of what, of support. But at the same time, let's bring this the level that we put on monthly as our weekly, so that, because remember we said when we hit this weekly zone, because this is the one that gave us a breakout, we need to know once we hit it so that we can start searching for trades to go long. So when we are on daily, we can see that the zone that we picked, it is still slightly higher than what, the higher time frame level. So even when you're getting confirmation to go long here, if your daily is your higher time frame, you still need to be careful because of what, the daily is to the downside, but this is a daily zone and it is fresh, it has never been hit before. So if the price enters that level, it gives you confirmation on your smaller time frames. You can do the same thing that you did here, where you're executing on that smaller time frame and target next opposing level on that smaller time frame. So you don't have to push it and say I'm going to exit at, let's say, 14,000, because why? Because you're executing daily as a higher time frame, and daily is not saying go up. You see, you're trying to catch something quick in and out because you're taking it from a higher time frame level. So even when you're setting your TP, you need to make sure that you are realistic. So once the price enters here, based on how it's going to react, you can take a trade and then you'll be targeting somewhere there. If let's say it's H4, it's going to be the same thing, somewhere around this as your TP, because you will never know what's going to happen. And on daily, because now we have a new lower low, it means that the downtrend now can be represented with a trend line like that. And this being your trend line, it means you can put this as your next resistance, this is your support. So the price is in between. Once it dips into this, that's when you'll be targeting either the trend line around there. You are exiting, you don't know what's going to happen. We are still bearish, you don't know what's going to happen to the trend line, and you don't have to predict that it will be taken out, which is something that I'm always telling you. Even the guys in the mentorship, you don't predict such. You're not God. You're going to take your trade from one level to the next, you exit, and then you watch how the price is reacting. Should it break it, then if there's a breakout, you can target the nearest support. Maybe you'll have a new support, and then you can join that movement to the upside, because you don't want to end up with a trade you're holding saying it's going to break, it comes back, you'll be frustrated that why didn't I close, because I knew that the price was going to struggle to pass that trend line. So to avoid such situations, when you get to your next opposing level, be it the next zone or opposing trend line, you exit. You don't have to fight there. So this is all that we have on your daily. There's your nearest support, and there is your area of what, of until the candlestick closes, this will be your what, when it closes, this will be your resistance. So let's go to H4 and see how is the structure. Just check how is the structure that side. So let's just update. On H4, the trend line will be the same, or more or less the same as what you had on what's this, on daily. So this is your H4 bearish trend line, and remember, this is your daily support. But for our H4, the nearest support is here, but we can't take this one. We are waiting for confirmation inside here. If H4 is our execution and you're using daily as what, as our time frame, as your direction, but because of what, both of them are bearish, we need to wait for the bigger one to be hit. Then based on the confirmation, if we get any day, then we can execute. This one is just in the middle of nowhere, we're not gonna take it, so we are waiting for a zone that is inside there. So you can take this one here, which is around where the daily one starts, this one. So once the price hits there, you need to wait for confirmation, wait for candlesticks, any signs of reversal there, then you can take it. You'll be targeting the next opposing level, which is around the trend line and around the same trend line that you saw on what, on daily. So that's how you'll be trading. So you can see when it touched that, it never even looked back. When it touched this, it just went straight down, because I told you that, remember I told you that when we were here, when we did the analysis, remember we were inside this. When I said you can look at the candlesticks you're getting here, you can look for reasons to go long around there. But when you're doing so, you are targeting this, because this is your next opposing level. You don't have to predict that's going to be broken. Why? Because daily is to the downside. H4 is also to the downside. We are trying to take a buy up and maybe catch a pullback on what? From a daily zone, and with confirmation. There you could have what? Exited there. Then I don't know if you'll have reasons to sell. If you did, good for you, but I wouldn't have had that. Didn't have that. So you can see now it went all the way down, which is why if you're going to neglect these levels and pretend like you don't see them, the price is going to react from them, and you know that they are there. You just chose not to take them into consideration, and then it came back and it bite you, it beat you, whatever. So to avoid such, don't have to enter the fight between the bulls and the bears. Whoever that says I'm in charge, you join them. Opposite level where they could find opponents, you exit, you watch. Whoever wins, you're gonna try and search for trades in their direction. So from now, because now it's a Friday, the momentum is about to die out. This is gonna close, so it's gonna close within this, but this is not a good zone. This is not a good zone at all. But you can maybe say, let's say we are analyzing what is happening here when it was formed, right? At some point, if you still remember this price action, at some point maybe you had that as your trend line. So the trend line was broken by a move that started from, let's put this so that we on the same page with what I'm trying to show you. Where is that? Yes. Let's say this was your area of resistance, and this was your trend line. The move from that resistance went down and broke the trend line and maybe areas of support, right? So you can see that this area of what? This. Okay, which one broke it? Let's just put it here. Yes. So this area of resistance was broken. Here it was not broken. The price came back. That's when it broke it. Maybe you can say that the current area of support that's about to gain control, it did something. It went up and it broke this level that once broke the trend line. But that alone, I don't think it's enough. Unless if you're trading H4 and H1, then you can take your chances there. But still with confirmation and targeting the next opposing level. Now it's not going to be on H4. It will be the next opposing level on that small time frame you're executing. If it's H4 is for your direction, you'll be targeting H1 where you're executing H1 resistance or H1 bearish trend line. But for me, if I'm executing H4, this I'm gonna wait and hope that we touch this one. That's where it can get my attention, and hope that we will get something, for short term to the upside. Maybe it will be short term, you exit, maybe it breaks, then it might end up being a long term one. But we don't know what's gonna happen. Should it go up to the trend line? We don't know what's gonna happen. But the biggest wish is that we come to this, so that everything is being reset. Then maybe that's when you're gonna get a punch to that, which is your max TP. TP1 always has to be at the point where you turn. Like if you turn here coming back, my question must always be, why did you turn here? What's so special about this price? What if the price struggles to pass again and does this? So we don't know that, which is why this is gonna be your TP1 and then TP max at the next area of what? Resistance, which is gonna be that one inside. Remember, this is a monthly one, so we will see what's gonna happen. So I think I can end it here. So for now, we can see that from what we did the last time, the analysis that we had, yes, the price did try to move up, but even when it was moving up, it was not very convincing. I mean, it was not forming stuff like this where it doesn't waste time. Here you can see we're trying to go up, but not very convincing. Look at this move, smooth to the downside. We can see the bears are in control there. But here the bulls are trying to come in, but the bears are not fully out. They recharged the bears at their territory, and then they pushed all the way down. So this was also not a good price action when you're holding your trades, which was more reason why you have to exit at this point, because the bears, they are showing you as we're moving up that they are not completely defeated, which is why they might recharge and find more sell orders at their next level, and they can push against you, and it's not going to end well. It's not gonna end well, and I know for a fact that this move, it sort of sanitized a lot of accounts, this move, because people, they just go in thinking Nasdaq is something you always buy. That's not always the case. You need to be able to spot your sensitive levels and be able to tell the trend and have a proper plan as to like what are you going to do and where are you going to do that, which is what I'm always showing you here. So I think I'm going to end it like that. And if you are interested, you like this style of trading, you can just contact me on Telegram and we will take it from there, because there are classes that are starting soon. So this is my Telegram number, where I'll show you all this stuff from the basics, because I feel like sometimes I might mention something that you feel like you need more information on it. So if you come that side, that's where we'll start with everything from scratch, so that when you are building all the blocks going forward until a point where you're doing the market analysis, everything makes sense. All right, guys, so that's all that I had for you with regards to Nasdaq, from the time when we had the analysis when we were still around here until now. We can see we did go up until that. Now it's down. We're saying maybe if it can touch this, then maybe it'll go up until there, but still, because we have a bearish trend line, it might struggle to pass, which is why this is going to be your exit point. It might be broken, it might be rejected, so we don't know. We're just gonna be played safe and exit. So that's it, guys. If you enjoyed the video, just make sure that you like and don't forget to subscribe as well. Then I'll see you in the next one. Sharp.